Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here with one more content, and that's going to be give the most. It's a more insight to all of our members, in which we are going to discuss about what is mean by R2R, what is mean by cash to cash, what is mean by procure to pay. That's a P2P. We are going to just briefly discuss on that, and in addition to that, we are going to do the more focus towards activities under R2R. There's a list of activities under R2R. Thus, we are going to discuss in detail what sort of activities we have to perform in R2R, and what is going to be roles and responsibilities, what's going to be your part of day-to-day activities. Thus, everything is going to be clubbed in list of activities under R2R. Even though uh, all these three processes are critical for a company's financial management and control and are interdependent. It means that all these processes are interdependent. So it means that all the data what we have captured in the subledger, that's going to flow into the GL. That's a cash to collection, procure to pay. That's all going to consider as SL, that's a subledger, and the data is going to flow from SL to GL, that's into the R2R. R2R, that's a record to report, that's a GL. So yes, these three processes going to be the most critical one from the company's financial management, and everything is interdependent. That's we are going to discuss, and we are going to do the more focus towards the list of activities under R2R. So request all the members to be with us till the end to get more clarity about that, and to have in-depth discussions on the list of activities. R2R, C2C, and P2P are different types of accounting processes which stands for R2R, that's a record to report. R2R is an accounting process that involves recording financial transactions in a company's general ledger and preparing financial statements. It includes activities such as journal entry, posting, account reconciliations, and financials reporting. So what's mean by R2R? So R2R, that's going to be involved the recording of the financial transactions of the company's general ledgers and preparing the financials. So R2R, that's a record to report. From record, we have to present the report to the management, and we have to ensure the completeness of all the transactions has been recorded in the systems with accuracies, and we have to check the accuracy, ensure the accuracy, and if any transaction is not posted in the systems, we have to post that. And finally, we have to submit the report towards the management. That's going to be the meaning of R2R. Just we are discussing the brief about these three processes, and then we are going to jump towards in depth to discussions what are all the activities involved into record to report. Next is going towards the cash to cash. There's a cash to cash is an accounting process that focuses on the entire cash flow cycle of a company from the time cash is received to the time it is disbursed. It includes activities such as cash receipt, deposit, disbursement, and reconciliations. So, cash to cash. So, at the moment the cash is generated or the cash is received in the business to till that's going to do the disbursement. That's everything is going to capture towards the cash to cash processes. And that's also is going to be the important, since that entire process is going to manage the cash flow cycle of that particular entity. That's the reason the cash to cash also is one of the critical functions towards the any organization. Next is going towards the procure to pay, that's a P2P. P2P is an accounting process that involves the entire cycle of purchasing goods or services, from identifying the need for the item to paying the vendor for it. It includes activities such as requisition, purchasing, receiving, and paying for goods or services. So if you're looking towards this, that's a P2P, that's a procure to pay. So in this procure to pay, the activity is going to be involved from the requisitions. So at the time of when we need something, from our business standpoints and the another vendors is going to provide for that, then we have to first raise the requisitions for that. Then we have to place the purchase orders, and then the material is going to receive. And once it's received, we have to do the payment of that. That's going to be the in-depth about procure to pay. From that, procure is going to start from the procurement, that's the starting point, to pay. It means from the acquisition to till doing the payment of that invoice. Thus, everything is going to be the part of our procure to pay. That's a P2P. Now, all three processes are critical for a company's financial management and control and are interdependent. That's already we have discussed. Now, the next is going towards that accurate recording of financial transactions. This R2R ensures that the cash flow, cash to cash, and procure to pay processes are properly tracked and controlled. So, accurate recording of financial transactions, that's a R2R. So, at the end of the day, all the data is going to be flow. That's a cash to cash and procure to pay. This all data is going to flow towards the GLs into R2R. And the R2R is going to ensure the accuracy of that all the transactions has been recorded in the systems is correctly. That's the responsibility of the R2R team to ensure that everything is correct. Since the subledger, that's O2C, that's cash to cash, and procure to pay, whatever the transaction is happening in the SL, that's going to flow towards the GL, and that's the responsibility of the R2R team to ensure and to check that completeness with accuracy for that transactions. That's the responsibility of the R2R. The R2R, record to report process, is a critical accounting process that involves the following activities. Now, we know what is meant by R2R, what is meant by cash to cash, and the last is what is meant by P2P. Now we are going to discuss about what are all the activities involved in record to report. And this is going to be the important to know that from our day-to-day activities as well. When we are looking ourselves to jump into the R2R, then what sort of activities are going to be, how this activity is going to be impact on your day-to-day work, what sort of work you are going to do on every day, what sort of work is going to be there on a month end. That everything is we are going to discuss here. So again, request all the members to be with us till the end to get a more insight towards accounting and finance. The first is going to be journal entry posting. This is the first activity towards the R2R. Recording financial transactions in the general ledger by creating the journal entries. So it means that record to report. So R2R is responsible to ensure all the transactions has been recorded in the system. That's a record. So we have first step to ensure that all the transaction has been recorded, and if any transaction is missing over there or not recorded, then it's our responsibility from R2R to have the journal entries in the systems, to post the journal entries in the system. So whatever the gap is there, whatever the month end entries we need to do, that everything is going to be taken care from R2R. So the first and most important responsibility is towards the journal entry posting, recording financial transactions in the general ledger by creating the journal entries. So whatever the expenses is not booked, whatever towards the revenue side, so we have to take the entries in the books. Giving example is that from the expense sides, if accruals, provisions, reversal of that provisions, then unbilled, deferred revenue. So we are going to take the entry for that in R2R. Next, again, once you ensure all the transactions has been recorded, then the next is going towards the account reconciliations. This is also one of the key responsibility of the R2R from month-end standpoint, reporting standpoint, since we have to first ensure that all the accounts is reconciled. Then we are going to present to the management or external world. But if our accounts is not reconciled, Giving example is that if your bank balance is not matching with your bank statement, how you're going to give that your financials to your internal team or your manager or to the external world? So account reconciliation is going to be the important one, ensuring that the balances of all accounts in the general ledger match the corresponding balances in the subsidiary ledgers or supporting documents. So here it's clubbed towards the SLGL reconciliations as well, and other than the SLGL, the rest other reconciliations as well. That's going to be the part of our balance sheet reconciliations. That's going to say is that whatever the number is there in the balance sheets, we have to perform the reconciliations for that. Wherever we have the secondary data, we are going to perform the reconciliations. And when we have to prepare the schedules from our internal data itself, then we have to prepare and create a schedules for that as well. So at the end of the day, what's there in that numbers, we are able to get in more clarity from our schedules or from our reconciliations that's going to be matched with balance sheet number. So this is also is going to be the important one. And in addition to that, the SLGL reconciliations. Since we already discussed about the cash to cash and procure to pay, this all is going to be treated as an SL subledger, since in cash to cash or procure to pay, we have to keep a track, maintain the ledger statement towards the individual of customers or vendor. So that's going to be captured in the sub ledger. But in a GL, so we are going to have the one number, what's payables and what's receivables. So we have to perform the reconciliations towards that as well. What's the balance in the SL and what's balance we have in the GL, and what are all the gap is there. We have to put it and we need to prepare the reconciliations for that. That's the second responsibility, accounts reconciliations. Next, third, financials reporting. So once we ensure all the transaction has been recorded in the systems, and if not, wherever we need to have the journal entries, we ensure that as well to re-ensure about all the transactions has been recorded in the system. Now the second is going towards the reconciliations. We perform the reconciliations, SLGL reconciliations and other wherever the supporting we have. Once we done with that as well, then the next step is going towards the financials reporting. Preparing financial statements such as the balance sheet, income statement and cash flow statement, which provide insights into the financial performance and positions of the company. So at the end of the day, we have to present the MIS to the management. That's a management information systems report. So every month we have to prepare that. So initially we ensure all the transaction has been recorded in the systems. Second, we reinsure that all reconciliations are in place. And once that's there, then we have to jump towards the preparation of the MIS. That's a P&L, balance sheet and cash flow. After that, fixed assets accounting. So once we ensure that three steps, in addition to that, this fixed assets accounting also is going to be recording and tracking the company's fixed assets, including acquisitions, depreciation, and disposal. This is also is one of the huge tasks when we have the more fixed assets. Then to having the list of that all the fixed assets and keeping the track of when that asset is going to ready for capitalizations. Initially, when we purchase, that asset is going to be parked towards the CWIP, that's a capital work in progress, or CIP, capital in progress. And once that asset is marked towards the CWIP, so when we purchase, that's going to be parked in CWIP, and from the CWIP, we have to do the capitalizations. Since pertaining to that one asset, if any other expenses also is incurred, that's also is going to be club over there. And at the end of the day, we have to recalculate how much is the value of that assets. Might be the basic value is there for that plant and machinery and any other services we hired from the another agencies. Then we have to club everything, whatever the expenses incurred at initial stage towards that particular asset, we have to consider that everything towards the capitalizations. So we have to take that towards the CVF. Then we need to get the confirmation from the respective users as and when that asset is going to ready for capitalizations. And then we have to bring that asset towards capitalizations from CWIP. So having the track of that, all the list of CWIP, getting the confirmation from the respective users, doing the capitalization of that, charging the depreciation on the assets, the all is going to be clubbed towards the fixed assets accounting. Next responsibility of the R2R is intercompany accounting, ensuring that financial transactions between different legal entities within the same company are properly recorded and eliminated in the consolidated financial statements. Now, we first ensure that journal entries, all the transactions has been recorded in the systems, and if it's not, we took the journal entries. Now the second responsibility is we observe that once we completed all the transactions has been recorded, we perform the reconciliations. Then we jump towards the financials reporting. We ensure that fixed assets accounting as well. Once we done everything, then we have to jump towards the intercompany accounting, and we have to ensure that all the balances towards the intercompany are matching with our books of account, and we have to perform the consolidated MIS. Since the intercompany transaction is going to eliminate, so thus again is going to one of the critical activities from the MIS. That's one is standalone MIS, and then based on the standalone and further transactions, validation of the further transactions is going to be prepared as a consolidated financials. That's going to be the important from the R2R. That's the intercompany accounting. And when it's a elimination is going to be there, so that intercompany balances and the balance between the both the entity intercompany, that's very important to reconcile that. Since if from the one entity we are going to eliminate, then that the secondary impact must be there into another entity. That's our intercompany. So removing that any open items over there in intercompany reconciliations, that's going to be create a problem for eliminations and consolidations. Next is going towards the month-end closing. The process of closing the books at the end of the month, which involves performing various reconciliation, adjusting journal entries, and preparing financial statements. That's going to be the part of our month-end activities or month-end close. We have to ensure that all the transactions has been recorded. Wherever we have the gap, we are going to take the journal entries for that to ensure that all the transactions has been recorded in the systems. Once that's recorded, we are going to perform we are going to prepare our preparing financial statements. Once we have the reconciliation, next is towards the preparing financial statements. Now, financial analysis. Once we prepare the financial statement, we have to start to do the analysis of that. Analyzing financial data to identify trends, variances, and opportunities for improvement. When we have the previous month's numbers and current month numbers, we have to perform the comparative analysis of that previous years versus this year, so previous month versus this year. We have to do the analysis of that financials data. We have to do the study of that numbers. We need to use the different formulas, ratio analysis. We have to do it, or if the MIS is prepared, we need to present the budgeted versus actual one. So that's also is going to be one of the important one. And what's we plan in the budgeted and where we are on our actuals, and if any variations over there, then what's the reason for that? If we uh, analyzing financial data, if we mention that it's going to be how the 100 crores as in sales, but we have done only the 90 thousands, or it's going to be 100 crores and it's a 90 cr 90 crores, then why the difference is there? That's also we have to do the analysis, and that's a part of our financial analysis. Next is towards compliances and audit, ensuring that financial records and reporting comply with applicable accounting standards, regulations, and laws, and preparing for audits by internal and external auditors. So every month we are closing our books of account and we are presenting the MIS, that's a P&L, balance sheet and cash flow, or balance sheet, P&L and cash flow. But from the year-end standpoint, and we are ensuring the compliances and audit as well. And from the year-end standpoint, we have to perform the financials reports from the audit standpoint, and we have to present that towards the audit. So we have to ensure that all the records are in place, and we ensure the compliances, and we have to support for the audit as well. So supporting towards the audit, that's also the one of the responsibility of the R2R team. Now the next is going towards the GL maintenance. Maintaining the integrity and accuracy of the general ledgers, including managing chart of accounts, opening and closing the periods, and posting the rules. That's also the one of the responsibility of the R2R team. If the technical team is not there, and if we haven't hired the technical team, then the creation of the general ledgers, that's going to be the our responsibility in the books of account. And we have to manage the chart of accounts, we have to add the opening, and we have to do the opening and closing of the period and posting the rules. That's also is going to be the responsibility of the R2R team. So that's all responsibility or list of activities under the R2R. So if you are looking yourself towards the jump into R2R, so first go through with the list of activities which going to ensure from R2R. So what sort of, and from that list of activities, your day-to-day work is going to be defined. So to say that instead of waiting for the month, you have to keep a checking of all the transactions, ensuring everything is correct from the 10th of that next month itself. As soon as you submitted your cash flow, MIS, that's a balance sheet, P&L, and cash flow, you have to jump towards the doing the analysis of that current month transactions. So that's also is going to be the part of the R2R. So that's we discuss here the list of activities under R2R, R2R, O2, C2C, cash to cash, and procure to pay. We explain, discuss that in details. In addition to that, list of activities under R2R, that's also we discuss. And from that itself, your day-to-day work profile is going to create it. So that's the responsibility of the R2R. Thanks guys for being with us, and request again all the members to start to put it in the comments. We are going to create a content on that as per your request and what you are going to ask us to create for you. Thank you.